everyone, I'm Laurie Ellison from Hudson Valley Bookkeeping, and in this video I'm going to show you how to post transactions that you paid with your own personal money on behalf of a rental property. All right, let's get started.
Okay, guys. So now we're talking about what happens if you pay for things outside of the accounts you have in QuickBooks, for instance, a credit card or a bank account. How are you going to record those? One hard and difficult way is a journal entry. And you would have to post a journal entry and post it to like an owner contribution. So for every transaction, or maybe you took 50 receipts and tallied them up and figured out that 200 was for office supplies and 800 was for auto. But it's very hard to then delve into the detail of that later because you'll just have this journal entry. And if you watch any of my videos, you know, I'm very against them. I find that I never usually like a journal entry, and I would like to see it happen on the transaction level. So let me explain what that means. So what we're going to do is create a petty cash account, and we're going to call it petty cash personal. We'll call it money contributed. Okay, so what are you going to put in here? It's like I said, it's everything that isn't posted through the checking account you have connected or that you actively post in. So you probably have you should have a bank account that's used for your rental property. And then perhaps you have a credit card. And then if you had a debit card, it's connected to the checking account for that rental property. But there's always, for some reason, something that you may have to use your own personal credit card for, and or something you have to front money up for that. And the best way is always to put the money from yourself into the property bank account, and then from there buy whatever you need to buy. But that is the best way, but it's not the way that always happens. So let's talk about how we're going to do that. So now you come home from Home Depot or Lowe's and you had to buy a whole appliance package for something you were remodeling. You didn't have the money in the checking account. Maybe for this rental property, you don't even have a credit card, right? So that would be one instance where you're using your own personal credit and credit card, and you just want credit for it. You're not going to pay yourself back out of the checking account for whatever reason. So you would say here, add expense. Say we went to Lowe's. We say new appliances for 40 Railroad, right? Put a class on it. Let's say it was $2,500. That would be a fixed asset. And you say, why would that be that? You need to track those. They're not an expensed piece. So we'll just put, they don't really have one for that. Machinery and equipment, fine. And I would put the year you purchased them because your CPA will then depreciate it over a certain amount. So you could pick that, but we're not going to do that. Okay, so that would be one instance of something you fronted the money for, right? And then you would just keep going. So we'll just do one more. Most of the money on rental properties that you're outflowing is either for a big improvement or certain things that you're paying back someone, right? Like someone who works for you. Class on there. And see, so that's different. So now here you have, in two instances, laid out money, and it did not come out of the actual bank account for the property. So what I say is that once you've tallied up and entered all of your receipts individually, this is why I like to do it individually, so you have no way of reconciling these things. So that's why you'd like to do one at a time. Mark the receipt that you posted it so you don't double post it later. Okay, so you'd post it that you post it in QuickBooks, mark it up, and then you don't double count. So at the end of the month, what I want you to do is we're going to make a deposit, and we're going to say to clear out petty cash for February. We're going to make a deposit, 2602.51, and this is a contribution. You gotta see. Okay, so here in this file, it's called owner investment. What is owner investment? It is all the money that you personally have invested into the company. So now you will get credit for $2,602.51 toward your equity. Let me show you. I clicked reports, I'm clicking balance sheet. Okay, so we have our balance sheet up. Our petty cash is at 0 again. Okay, so we're gonna go look at owner investment. That means money you have given toward your rental property. And you see right here, this was the deposit I used to clear out that petty cash. So now you're given credit, right? That's really important that we capture all the expenses that you have paid on behalf of the property. And this is the best way, in my opinion, to do it. All right, I hope you found this helpful. Please put any comments in the comment section if there's something you would like video you would like me to make. And also just remember, I offer private QuickBooks lessons. All right, have a great day.